Doug, thank you very much. We've gotten a lot of interesting catalysts over the last 48 hours.
Sure.
With markets still hovering near record highs, the Dow's at one. How exactly do you make the market story click in your mind and for your clients about just what's happened with the government shutdown, the longest in history, the economic impacts still unknown, yet markets still at or near record highs?
Yeah, it's getting through that unknown part, right? The market loves certainty, and you just got a big dose of it here by ending the government shutdown on the back of getting us into the happiest time of the year, right? From that run from Thanksgiving into the holidays. So there are a lot of tailwinds going on right now to wrap up what has been a pretty good year for U.S. markets, an amazing year for international markets. You know, okay year for fixed income. But altogether, you have a 2025 that has the potential to end on a very high note.
So that high note is something that clients have to be happy about right now. When you talk to your clients about what the outlook could be, do they feel as though there is more certainty, to your point, in 2026? Or is the picture just that much more unclear, given the fact that we have had no data, don't really know what's going on, and the markets are still maybe trying to find a way to move higher?
Yeah, we're looking at DoorDash data now for, understanding how things are
Indeed data.
going.
We're doing all kinds of alternative data.
Hey, maybe it's a fresh look and maybe it's crazy. We don't know. We'll find out. But I think when you're handling clients' money, right, you have to set expectations accordingly. I think we live in a world now where it's just very difficult to have any level of certainty going into a stretch of 1 year or 5 years. So volatility, I would expect to always be part of the case. Like, you go back to April of this year, you almost forgot there was a 20% bear market correction. Almost nobody is talking about that right now, but you had to live through that. So white knuckling volatility almost in any year is something that's on the menu, and that's where you control expectations. You're going to hit those things. If we're talking AI, you're going to have volatility there as well when expectations kind of get thwarted, and yet there's unlimited spend in the infrastructure there. So again, it's a game of expectations. We set those for our clients. We could have a great 26, or we could have something that's flat. But so far, we're going, for the trifecta here from 23 into 25.
Speaking of expectations, the main driver of a lot of this, arguably, maybe even certainly, has been the technology and AI trade specifically. It's been a massive headline for the entire markets. Expectations-wise, what are your expectations for how that AI trade plays out?
Yeah.
Has the quote-unquote easy money already been made?
I think long-term, this is the place you want to be. But the expectations are from retail investors, you're going to get something groundbreaking tomorrow, right? Where's that real deflationary piece of technology coming into play? Yet, the real story is this unlimited spend and insatiable appetite to build the infrastructure that gets you there. And I think when the expectation of the investor meets the realities of where that spend is actually going, that's where the volatility occurs. You don't have to go back too far. You can go to 2022 to just see how, brutal those drawdowns can be, particularly in that space. But you had to get through that to then, rip your face off in 23 and having an okay year in the space here in 25. So expect that, and I would, on the theme of expectations, expect more volatility, but also long-term growth for the foreseeable future.